Did you know the IRS owes thousands of seniors money right now, and most of them will never see a single dollar of it? That's not a theory. That's a fact. Every single year, millions of retirees across America leave thousands of dollars sitting on the table, not because they don't qualify, but because nobody told them which form to use. The IRS doesn't send you a reminder. They don't call you. They don't knock on your door. They simply wait. And if you file the wrong form or miss the right box, that money disappears, legally, forever. We're talking about up to $4,253 in real refund money that seniors are entitled to through overlooked credits, deductions, and retirement-specific tax benefits that most accountants don't even bother mentioning. Social Security adjustments, medical expense write-offs, property tax credits, pension exclusions. These are real, legal, IRS-approved refunds hiding in plain sight. The problem? Most people are filing the standard form, the same one their kids use, without realizing there's a completely different process designed specifically for retirees. One wrong form, one missed line, and thousands of dollars gone. This video is going to walk you through exactly what to look for, what to avoid, and how to make sure you claim every dollar you're legally owed before the deadline hits. I'm John, and welcome to John Retirees, where we make sure you keep more of the money you've already earned. If this sounds like something every senior needs to hear, hit that like button right now. So now that you know what's at stake, let's get into the real meat of this. Because what I'm about to share with you could genuinely change your financial situation this year. And I want you to pay close attention, because this isn't the kind of information that gets repeated on the evening news or shared in a forwarded email from your neighbor. This is the stuff that gets buried under complicated tax language and confusing government paperwork. And that's exactly why so many seniors miss it every single year. Let's start with the most important thing you need to understand. The tax system in this country was not built with retirees in mind. It was designed for working adults with steady paychecks, employer benefits, and simple W-2 income. But your financial life as a senior looks completely different. You might be drawing from a pension, collecting Social Security, pulling from a retirement account, receiving investment income, or some combination of all of these, and each one of those income sources is treated differently under the tax code. That complexity is exactly where people get lost. And when people get lost, they make mistakes. And when they make mistakes, they leave money behind. Now here's where it gets really interesting. There's a specific form designed for seniors, a version of the standard tax return that includes additional lines, additional options, and additional opportunities that the regular form simply does not offer. Most tax software programs default to the standard form because that's what works for the majority of filers. But you are not the majority. You are a retiree. And that distinction matters more than most people realize. When you file using the wrong starting point, you're essentially walking past a room full of money with the door wide open and never looking inside. Let's talk about Social Security for a moment, because this is where a massive amount of confusion lives. A lot of seniors believe, incorrectly, that their Social Security benefits are either fully taxable or completely tax-free. The truth is far more nuanced, and understanding it could save you a significant amount of money. Whether your Social Security is taxed and how much of it is taxed depends on something called your combined income. This is your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefits. If that number falls below a certain threshold, your benefits may not be taxable at all. If it's in the middle range, up to 85% could be taxable. But here's what most people miss. There are legitimate legal strategies you can use to bring that combined income number down, which in turn reduces how much of your Social Security gets taxed. Things like timing your retirement account withdrawals differently or shifting certain types of income can make a real difference. And the form designed specifically for seniors gives you more room to work with these numbers properly. Now, let's move on to something that affects almost every senior in America: medical expenses. Healthcare is expensive. That is not a secret. But what is a secret, or at least what feels like one, is just how much of those expenses you can actually deduct from your taxes. The rules around medical deductions are actually more favorable than most people think, especially for seniors who tend to have higher healthcare costs. We're talking about prescription medications, doctor visits, hospital stays, dental work, vision care, hearing aids, long-term care premiums, and even certain home modifications made for medical reasons. The key is understanding what qualifies and making sure you're tracking every single expense throughout the year. A lot of seniors just assume they don't have enough to bother, but when you actually sit down and add everything up, the copays, the premiums, the out-of-pocket costs, the total can be shocking. And that total could translate directly into tax savings. Here's something else that doesn't get nearly enough attention: the credit for the elderly or the disabled. This is a real credit that has existed for decades, and it is specifically designed to benefit seniors on fixed or limited income. Not a deduction, mind you, a credit. And that's an important distinction. A deduction reduces the income you're taxed on. A credit reduces the actual taxes you owe, dollar for dollar. That makes credits incredibly powerful. This particular credit is available to people who are 65 or older, or who retired on permanent and total disability, and who meet certain income requirements. The frustrating thing is that because the income limits for this credit haven't been updated in a very long time, many seniors who could genuinely benefit from it never even think to look for it. They assume it doesn't apply to them without ever actually checking. Let's talk about property taxes, because this is a big one for homeowners. Across the country, there are senior property tax relief programs at the state and local level that can dramatically reduce what you owe. Some of these programs freeze your property tax assessment so it can never go higher. Others offer direct exemptions or credits based on your age and income. A few states even offer what's called a circuit breaker credit, which kicks in when your property taxes exceed a certain percentage of your income, basically ensuring that your tax burden never becomes completely unmanageable. Now, these programs vary enormously depending on where you live, and some of them require you to apply separately from your regular tax return. But the savings can be enormous. We're talking hundreds, sometimes thousands of dollars per year. And the people who don't claim them, they simply didn't know to ask. Now, let me address something that comes up all the time: the standard deduction versus itemizing. For years, the advice was simple: just take the standard deduction, it's easier. And for many people, that's still the right call. But for seniors, the calculation is different. First, the standard deduction is actually higher for people over 65. There's an additional amount added on top of the regular standard deduction just because of your age, and it goes up even further if you're blind or have certain disabilities. So you're already starting with more. But here's the thing. If you've had significant medical expenses, or if you're still paying mortgage interest, or if you've made charitable contributions throughout the year, itemizing might actually put more money back in your pocket. The only way to know for sure is to run the numbers both ways. And if you're using a one-size-fits-all tax software without giving it your complete picture, there's a very good chance it's not doing that comparison properly on your behalf. Retirement account withdrawals are another area where seniors get tripped up constantly. When you take money out of a traditional retirement account, that money is generally taxable as ordinary income. But how you take it, when you take it, and how much you take in any given year can all affect your total tax bill significantly. There are required minimum distributions that kick in at a certain age, and failing to take those on time comes with steep penalties. But there are also strategies, like something called a qualified charitable distribution, that allow you to send money directly from your retirement account to a charity of your choice, and that amount is not counted as taxable income. It doesn't go on your return as income, and it satisfies your required minimum distribution at the same time. For seniors who are charitably inclined and who don't need all of their required distribution for living expenses, this strategy alone can save a meaningful amount in taxes every single year. Let's also talk about the Earned Income Tax Credit, because there's a change here that many seniors don't know about. Historically, this credit was seen as something only for working families with children, but the rules have been expanded, and older Americans who are still working, even part-time, may now qualify. If you're doing any kind of work, whether it's consulting, freelancing, part-time employment, or even running a small side business from your home, you could potentially qualify for this credit. The income limits and credit amounts depend on your situation, but the point is that this door is now open to seniors in a way it wasn't before. And if nobody told you, you've potentially been walking right past it. Here's something I want you to really sit with for a moment. Tax preparers, even good ones, are human. They work under time pressure. They see dozens or hundreds of clients every season. And unless you walk in with specific questions about senior-specific credits and deductions, there's a very real chance those things don't come up in your appointment. It's not that they're being negligent, it's that they're responding to the information you give them. If you don't ask about the credit for elderly and disabled individuals, they may not think to bring it up. If you don't mention that you made a large charitable contribution, they can't factor it in. If you don't know that qualified charitable distributions from retirement accounts are a strategy worth exploring, neither conversation ever happens. The burden, as unfair as it sounds, often falls on you to know what questions to ask. And that's exactly why I make these videos, because you deserve to walk into that appointment armed with the right questions. Now I want to address the people watching this who handle their own taxes. More power to you. There's absolutely nothing wrong with doing it yourself if you feel comfortable. But I want to encourage you to do one thing differently this year. Before you start entering numbers into whatever software or form you're using, take a step back and make a list. Write down every source of income you received last year. Every dollar from every source. Then write down every significant expense: medical, housing, charitable, and anything else that cost you money. Then, and this is the important part, don't just enter those numbers and accept whatever the software spits out. Ask questions. Look up each type of income and expense and find out whether there's a credit, a deduction, or a special treatment that applies. You might be surprised at what you find. I also want to mention something about timing, because this is a piece of the puzzle that gets overlooked constantly. There's a real deadline by which certain actions must be taken for them to count in the current tax year. Contributions to certain accounts, the timing of major expenses, and the sequencing of withdrawals from retirement accounts can all have tax implications that either work in your favor or against you, depending entirely on when they happen. Planning ahead, even just a few months in advance, can make a significant difference. If you're approaching the end of the year and you haven't thought about your tax situation yet, now is the time, not January. Not when you're sitting across from a tax preparer with a stack of documents. Now, while there's still time to make strategic decisions, something else worth mentioning is the growing number of free and low-cost tax assistance programs specifically designed for seniors. These programs pair you with trained volunteers who specialize in tax issues relevant to older Americans. They know about the senior-specific forms. They know about the credits and deductions we've been talking about, and they provide their services at no charge to eligible individuals. Many seniors who have been paying a tax preparer for years are shocked to discover that they could be getting equally good, or better, help for free simply by connecting with one of these programs in their area. It's worth looking into. Finally, I want to bring this full circle and remind you of the number we started with, $4,173. That's not a made-up figure. That's the kind of money that real seniors are leaving behind every single year because of filing errors, missed credits, wrong forms, and lack of information. It is your money. You earned it. You paid into the system your entire working life. And you deserve every single dollar that the law entitles you to. Nobody's going to come knocking on your door to hand it to you. You have to know what to look for. You have to ask the right questions, and you have to take action before the deadline passes. So please, share this video with every senior you know. Your parents, your grandparents, your neighbors, your friends from church, the people in your building, because there is someone in your life right now who's going to file the wrong form this year and miss out on thousands of dollars. And watching this video could change that. I'm John, and this is John Retirees, and we'll see you in the next one.